Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He tells us commodities are down while the stock markets were mixed. He takes a look at bonds, gold, and currencies. InsideTrackTrading.com President Eric Haddock examines the cycles affecting the stock market, inflation, and interest rates, and answers the question, will the stock market bear rally continue later this year? West Vancouver real estate superstar Allan Angell gives us the lowdown on Canada's priciest properties and shares his opinion on whether we're about to see a massive real estate crash. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Always good to be with you, Jim.
Ross, are the stock markets in what you might call a typical summer doldrum?
Well, they are. We bottomed out here the better part of a month ago, and been going through, it was pretty hard hit. Everybody classified it as a bear market. We were down 20% on most indices, some of them far worse than that. You take a look at the ARC group, the innovation stocks, topped out in November before everything else, and then has bottomed out before everything else. So, we're definitely into that consolidation phase after the hard hit. The question will become, do we retest resistance here at 4,000 on the S&P and manage to push through, or do we get back down and retest that low? So in the meantime, it's a trader's market. There are some short-term opportunities available as far as the indices are concerned. But, there are other things going on here of significance. Back in April, everybody was just worried to death here about what was going on with agricultural prices, the price of corn, wheat, soybeans, just going through the roof and creating some really nice overbought readings, the type of things we saw back in the mid-1970s. Before the big corrections. And if we look at it right now, that's exactly what we've got going on. Big highs. You take a look at, the wheat ETF. We've gone from $7 to $13, so just shy of 100% advance in price. And you know what? We're back down under 8. The same type of thing in corn. There you've got a move that went from 5.80 to 8.25, and we are now back exactly where we started in 2022. So the fear, the greatest fear is that which is going to happen, that in reality does not come about. That this massive inflation is definitely right now on the back burner. It's something that we're not experiencing since the middle of April. Things have been eroding away, and don't be surprised when you start to hear about year-over-year inflation numbers being fairly subdued as we move through the second half of this year.
I hate to admit it, Ross, I was cheering for inflation a little bit because I wanted my pension check to go up.
I think we all wanted that. The numbers on the pension check really wouldn't matter anyway.
Yeah, another 10 cents. Ross, what's going on in the crude market?
Yeah. There's another one. We all got excited about what crude oil could do. Got to $130. That quickly backed off into the high 90s, which were kind of expected. when you've got a run as large as that one. And this is clearly one of those consolidation markets. We've been stuck since that initial high, which is back in March. I mean, what are we? A number of months now. You're stuck in this, let's call it a 92 to 105 range, and the really good support is still down, I would suggest, in the lower 90s. We've got some long-term moving average, like the 50-week moving average down around 92. You take a look at the monthly averages, down more into the high 80s to be looking at over there. And the related stocks, if we take a look at like the XEG down into oversold territory right now, and enough that you could get a little bit of a bounce out of there. So still think of this as a category that is just consolidating, and still got some time to rest around here.
On the gold market, what's going on?
Interesting. We became oversold, became more oversold. It just, continued on. Got down and tested some pretty good support levels. And this week in particular, we looked at some of the stocks like Newmont. Newmont had the most oversold reading, ranks right in the top 7 of the last 5 decades. And each time that we have been this oversold, it has been the tail end of a bear market, and just the setting up for a base in the coming month or two from which you can have a sustained move. So we've got a piece that we put out on Newmont earlier this week, and if people send along a request, I'll send out the Newmont piece so you can see exactly what bottoms tend to look like in this stock. And we would anticipate that on a retest of the low, the stock could easily tack on somewhere between 25 and 75% coming off of this as we move through the coming months. And I'm talking about not months or weeks. We're talking really longer term. So going to take a little bit of patience. There could be some option trades in here, as well as just some outright purchases for the company stock.
What's happening with Canadian and U.S. dollars?
So with the sort of basing in the gold market, what you're looking at is a topping as far as the U.S. dollar is concerned. And at this point, you're looking at a dollar index, which peaked around 109. Good overbought readings there. Some of the best ones that we've seen since the bottom in 2021. That's been a pretty good run. We're sitting at 106, and I still think that support is more around the 105 range, and high probability of seeing that. With that, the inverse would be such that we would see a decent bounce as far as the gold market is concerned, and the mining stocks. The other thing that everybody had been talking about so much in the first half of this year was what was going on as far as interest rates were concerned. And if we look at the bond market, both the long bond and the 10-year note, they based out quite nicely with a really hard hit into the middle of June. Nice head and shoulders bottom has developed since then, and there's a pretty good chance that if the 10-year note can pop through 120 resistance on the top side, that we could have a nice prolonged move as far as a rally is concerned there, which implies that interest rates are headed lower. So, don't be surprised, as I say, when year-over-year numbers on inflation start to subside a little bit.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on Twitter at Charts by Ross. Coming up, Eric Haddock next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Eric Haddock, CEO and President of InsideTrackTrading.com. He's speaking to us from Central California near the Fresno area. Welcome back to This Week in Money.
Well, thanks for having me back, Jim. Pleasure to be here.
Eric, can you tell us a little bit about Inside Track and how people can subscribe?
Well, a lot of that information is laid out on our website at InsideTrackTrading.com, and that's inside with the extra I in the middle, INSIIDE, TrackTrading.com. But we are a financial market, and that's commodities, stock indexes, and related vehicles, analysis and advisory service, and providing everything from cycle analysis to very specific technical and related fundamental analysis, and taking that to a more practical and pragmatic approach of bringing it down to specific trading strategies and what readers can do with that information.
Do your cycles have windows of time that could extend or shorten cycle times by weeks or even months?
Well, first it's important to keep cycle analysis in its proper context. While very valuable, cycle analysis also has some very specific limitations. And as a result, I treat it as a backdrop that helps set the stage for more specific and trade-specific analysis. To kind of give an overview of that, cycle analysis is my starting point along with other foundational approaches like Elliott wave and Gann techniques, all of which possess a fair amount of subjectivity. And that's why I only use them to provide a base on which to build more focused and specific analysis. But with that said, I do treat cycles with and giving them a little bit of leeway, a margin of error that I describe for specific cycles, whether that be weeks or months or even days when you're talking about daily cycles. But if they're stretching beyond that, it tells me that something I have interpreted or perceived was probably wrong, or the market just blew through what should have been a cycle turning point, and that in itself is a very valuable trading signal itself, telling you when a market is exiting a normal trending mode or even a consolidation mode, but going into a more extreme parabolic or accelerated move. So there is certainly some latitude given to cycles in my work, but not too much.
If the stock market hits another top in the next couple of months, can the cycle see if a continuing bull market or bear market would likely follow?
The first and probably most important distinction to that question would be to clarify whether you're talking about a higher high when you say another top, or a secondary top, a peak that's lower than the November 2021 or January 2022 highs, but one that is still the highest point of what appears to be a developing rally, and one that will hold for several months after that. That distinction would have a strong influence on the expected pattern and magnitude of what would likely follow, because of where it is within a specific wave structure. I do expect another important peak, ideally in September of 2022. And to put that into context, since March 2020, when cycles projected a multi-year low in stocks and a 1 to 2 year buy signal was triggered and published in our publications, I've discussed a combination of cycles that were formulating very specific expectations for 2021 through 2023. Those cycles were powerfully validated when 3 different indexes reached multi-year upside target and fulfilled the criteria for fifth wave peaks in November 2021. So in those cases, those markets, those indexes would not be expected to set higher highs anytime soon, and instead I'd be looking for more of a secondary top coming in at the next cycle time frame. That action in many of those stocks, many of those indexes, reinforced my outlook for 2022, which explained why a divergent peak should occur in early January of 2022, when I described why a few remaining stocks should set higher highs while the majority would set lower highs, and that would usher in a multi-month sell-off. And at the same time, I was discussing that early January cycle peak. I was also discussing a future high that I expected would come in September or October of 2022, ideally in September of 2022. And of course that, just by definition, if you have 2 subsequent cycle highs, it means you have to have a pretty good sell-off in between. And that's why one of the reasons I was looking for a 4 to 5 month sell-off in the first half of 2022. Everything about the action of January through June has corroborated that outlook, and it's reinforced that a September 2022 peak, if it unfolds as I expect, should be a lower high in most stocks and indexes. There are a few sectors and indexes that could reach higher highs, but they're the exception and not the rule. All that to say, I'm looking for another downtrend beginning in the fourth quarter of 2022, and then stretching into some key time frames in 2023. I'm just beginning to elaborate on those specifics for my subscribers, so I don't want to reveal them at this time. But the overall outlook has been that 2022 and 2023 would be more of a prolonged bout of selling in stocks. And leading into this year, I also explained why I thought there would be a lot of similarities to 1973-74. And before elaborating on that, I need to stress that there is that cliche that cycles rhyme, they don't repeat, or that history rhymes, it doesn't repeat. And so when I say similarities, there's some parallels, but it doesn't mean that I'm expecting an exact blueprint of what happened 49 to 50 years ago. But already we've seen a lot of the things that I described in late 2021 reinforce that parallel. And in that time frame, you saw about an 18 to 24-month bear market in stocks with some decent rallies in the midst, and certain stocks that did better during those rallies, others that didn't. But you just think about all of the parallels leading into this year that we had, and that I listed 7 or 8 of them last year, and now all I've been able to do is put check marks next to all but 1 or 2 of them, and that included the resurgence of war cycles that I was projecting to take hold in late 2021 through 2025, but we had similar war cycles back in the early 70s. Funny enough, the 73-74 period came after what was then the longest war the U.S. had been embroiled in, and now we came into this year with last year's exit from Afghanistan marking the new longest war that the U.S. had been tangled in. You had even the social parallels with 73-74 and Roe v. Wade, and the way it was setting up for 2022 to see a likely reversal of that, which we've now seen. you had different markets that were in very similar patterns, and the stock market was one of them. Back in 73, 74, the market peaked in January of that beginning of that 2-year period, just as the final stocks and indexes peaked in this year. And there's a lot of other parallels that I've discussed in several of my monthly newsletters and elaborated on them. So rather than go too deep into the weeds with that right here, I would say that that general pattern of what stocks saw in 73, 74, and that doesn't mean that the magnitude of each move is the same. It's talking about the general swings and cycles that I thought we would see that replicated in 2022, 2023. And so far, that's what the markets have done. Even back in 73, you saw Dow sell off into July and then rebound into October. Well, this year, many of the cycles lined up in mid-June, and subsequent high cycles are lining up in September, although it could stretch into October. So you have some parallels there again. And from there, you saw another sell-off into the end of the year, and then a series of declines and bounces in 74 until the bottom was finally seen. So all that to say is that's kind of the scenario that I've been looking for right now. In mid-June, we fulfilled 6 to 12 month downside price targets. So most stocks had really reached the extreme levels that I had for the first 9 months of this year. And at the same time, we're fulfilling important cycle and wave timing objectives. And then just last week, as we were leading into the week of July 11th to the 15th, I explained why some of my specific technical indicators were getting ready to give confirming buy signals, and that starting July 14th, we should see a bullish period begin in stocks. And again, I explained the specific indicators and why it was pinpointing that July 14th time frame. In my July 13th alert, I published a pair of critical buy signals that had lined up. And on the morning of July 14th, those signals were triggered, and it reinforced the idea that a multi-month low was likely intact, and that we should see a series of rallies beginning in late July and then stretching into September.
Is there a point in the stock market cycles where the market stops climbing a wall of worry?
Absolutely, and we may have already seen it starting earlier this year, but it might become even a little more intensified later this year and early next year. But you do see that frequently, and the market either finds a way to put a good spin on potential negatives or just kind of ignore or deny them, and it will do that right up until the last possible moment, and then finally it just gives up the ghost, sometimes in a matter of days or weeks, and you get this sharp plunge, kind of like you saw in February, March of 2020, and within a matter of weeks, an entire correction has unfolded, and then the market tries to start finding a bottom and start to develop a bottoming phase and hopefully get into a new advance from there. But that goes along with what I call the 90-10 rule of cycles, where in certain key markets and at certain specific time, those markets will often see 90% of a price move or trend during the final 10% of a cycle. So if a market were going along just trading sideways, and a perfect example of this was late last year and early this year, and I was talking about these 1 to 2 year cycles I had in the wheat market. And all of them were saying that we should see a pretty significant top in early March of 2022, but wheat had not really given much of a convincing rally into that time frame. And as we came into December and January, explained why some corroborating technical indicators were showing the same thing, so nothing had violated this outlook. And then in January and February, I repeatedly explained why all these factors were showing that we should see more of an accelerated advance, maybe even a parabolic move in wheat, leading into the early March cycle. And so it was just going along, kind of trading sideways. Then Russia invaded Ukraine, and we just went into a parabolic move, and within a few weeks it had filled all of its multi-year upside targets and was setting a cycle peak. But did the majority of that move, the majority of that uptrend occurred in the last 10% of that cycle. And that's a more common than not phenomenon that you see in the market, and it also applies to a market that is held up, and a cycle low is coming, and all of a sudden during the final weeks or months, the market sees a sharp sell-off and then bottoms during that cycle low.
Are the different stock market sectors in different cycles?
To some extent, yes. And there are often specific leaders and followers. There have been different times through the last couple of years where the Dow transportation average and transports were leading the way. And then there were times when the Russell 2000 and some of your small and mid-cap stocks were leading the way. This latest bottom, I explained why I thought the NASDAQ 100 and your tech stocks would start to lead the rebound from a mid-June bottom. And in some cases, like oil stocks and gold stocks, those different cycles have as much to do with the price action of the underlying commodity as it does the cycles within the overall stock market. However, with that said, most stocks and indexes do turn in pretty close lockstep with the weekly and monthly cycle turning points that I'm looking for. It's just the magnitude of those turning points, those highs or lows, that's the important distinction. And that is very similar to what I was describing about earlier this year with several stocks and indexes peaking in November, and then some remaining ones that were expected to set final highs in early January. There were also many stocks that had already peaked in May of 2021, and then some in September of 2021. So it was this progression of less and less stocks reaching higher highs, but they were all setting intermediate turning points with those cycles. So we had intermediate cycles in early May, then early September, and then early January, and in between that September and January time frame, it broke down into a November time frame, and all that was related to an uncanny 8-month and 16-month cycle in the stock market, which was breaking down into 4-month and then breaking down into 2-month cycles, leading into a top, which is what cycles often do. As they're getting to a culmination point, they will start kind of reinforcing that cycle by breaking down into half cycles and then quarter cycles, all reinforcing the overall larger cycle. So to answer your question, those sectors will be in different cycles and in different positions within an overall wave structure. But from the cycle turning points that I look at, they will often turn in sync with those cycles, and then it's just a case of the markets that have set progressively lower highs, maybe during 3 successive cycle turning points, they've set a lower high each time, whereas other stocks have continued to climb that wall of worry and set higher highs. Those ones that have been setting progressively lower highs are now in a far more vulnerable and precarious position where they're getting very close to an accelerated sell-off. So it is a case of being in different cycles and yet turning at similar turning points.
Is it likely the U.S. dollar has topped for now?
I think that probably is the case. The U.S. dollar index has fulfilled about 80 to 90% of my 1 to 2 year upside targets that stemmed from when multi-year cycle lows bottomed in the first quarter of 2021. So it's far more likely that the dollar index would soon enter a period of consolidation, since I think there still is at least one and maybe a pair of higher highs to come in 2023. But if they are going to fulfill and not dramatically exceed the 2 year upside targets I have, then the market needs to do something in between now and then without accelerating to the upside. Now, there always is a chance that it could break through those primary 2 year upside targets and accelerate to secondary, more extreme upside targets. But if the dollar index is going to be a little bit more of a normal type of trend, and where it is within its broader 5 to 10 year trend and where it is within a wave structure argues for this 1 to 2 year rally being more normal, not extreme, then again, I would say that it's more likely that the dollar is going to see some consolidation, some pullbacks from the current levels, as opposed to continuing to just head straight up as it's done for so long now. It also fulfilled a intra-year, what I call an LLH objective. So it's basically a primary upside target within the year of 2022 based on a couple of key previous lows and how they project a future subsequent high. It has reached that objective around the 108 level. So even that is saying to me that the dollar has fulfilled most of what seemed likely for this year, and so it's more likely that it's entering or about to enter a period of some consolidation.
If the U.S. dollar is in a downtrend, could stock markets and commodities head higher together?
Oh, absolutely. It really comes down to what traders are most focused on. And that's why I have what I call my axiom of market correlation. And briefly, the way I've described that is markets only follow other markets when the lead market is going parabolic or is in an extreme and very convincing trend phase. As a side to that, or a secondary axiom to that, correlations are only effective when you can be certain of the current focus of traders. Now, putting that into a little more easy to understand description, there are so many correlations that a lot of traders stay married to. And, a simple one might be if interest rates are going up, that's bad for the stock market. And so if bonds are heading down, which is what they do when interest rates are heading up, then that's negative for stocks. Well, you could have a scenario where you're seeing moderate inflation, which is often good for the economy and good for stocks, and so the stock market could be rallying on that, even as bonds are heading lower, because they're responding to that expectation of higher interest rates, either very soon or in the conceivable future on the horizon. And so when the stock market is kind of the primary focus of traders, that could be going up while bonds are going down. And we actually saw a fair amount of that in 2021 when bonds were already past a major cycle top and were selling off, and the discussion of at least no longer lower interest rates. It wasn't as intense of a higher interest rate discussion as we've seen this year, but there was already that expectation that interest rates had bottomed. They were going through a bottoming phase now, so bonds were consistently selling off, even as the stock market was rallying. Then you come into this year, and things get a little more intense on the interest rate outlook, and all of a sudden bonds are selling off and stocks are selling off with them. So you've got a 180-degree flip in that correlation. Same thing with gold to the stock market, or gold to bonds, or the dollar to the stock market. When the dollar is heading lower on a reasonable level and doing it in a measured trend, often that's looked good for exports. And since cheaper dollar encourages exports, and so that may help the stock market. So you've got a declining dollar at the same time as a rising stock market. But then all of a sudden, if you get to a point where the dollar's selling off because there's more concern about fiscal and economic policy, and then starting to wonder what that might do to the economy out in the near-term horizon, all of a sudden you'd have the dollar and stocks selling off at the same time. So it's very dangerous to try and not only correlate two markets or two sectors, but also to stay married to that correlation, because it can change on a dime. And so the question of whether, if a dollar downtrend could help stock markets and commodities, it very easily could right now, because what would be the most likely thing to have the dollar correct from current levels, it would probably be if expectations for interest rate hikes started to moderate. So if you get a few more numbers come out that say, okay, inflation, now I know the most recent inflation numbers were still pretty bad, but many of the other economic numbers are starting to show a little bit of vulnerability. And so if you start to get that perception about dramatically higher interest rates moderate a bit, and now traders are only expecting a reasonable uptick in interest rates, well, the dollar would probably sell off some because it had been rallying on that perception of much higher interest rates. Well, if you had that happening where the perception of interest rate hikes started to moderate, all of a sudden that would take some pressure off the stock market, would probably take some pressure off things like gold and silver, allowing them to rally. And the dollar heading a little bit lower is often viewed as good for commodities, coming back to that export enticement correlation. So you could easily see the dollar, if it entered a 1 to 2 month reasonable downtrend, you could easily see stock indexes and commodities, like I said, gold and silver, they could see a decent rally in the midst of that. It all depends on what is governing that lead market, whichever the lead market is, what is governing that move, and what the traders have their most intense and acute focus on.
What are the gold cycles showing you?
Coming into this year, gold cycles had some similarities, but also some distinctions with stock market cycles. And when I say cycles, I'm referring to the turning points that I anticipated. And whereas stocks, I thought, would see two important tops in January and then September or October of 2022, gold was a little different than that. It was showing that it should see a very important top in late February, early March of 2022, and then a subsequent high in late August, early September. There are some indicators it could stretch that into late September 2022. But just like stocks, it's more likely that the first quarter peak would be a higher high and the third quarter peak would be a lower high. So I do think we'll see a multi-week rally in gold here in the August-September time frame, could really start at any time now that gold has just spiked down to 1680, which is major price support. And so that could trigger a 4 to 6 week rally in gold, basis my work. And if we do get some of those other factors that you were just kind of postulating there about the dollar pulling back a bit, and even interest rates, the expectations there moderating a bit, that could be something that takes some of the pressure off of gold and some commodities and allows a bit of a rally here. So like I said, this 1680 level in gold is really the key one for me. That's where the low of March 2021 was. It's where gold has had a consistent, what I call range target support and resistance going back to early 2020. It's this pivot point, this balance point or equilibrium point that gold frequently returns to. And I think that that's the ideal level to look for a bottom. And like I said, we're just seeing that tested today. So it wouldn't surprise me at all to see a rally come from that.
With interest rates rising within a cycle time, is there any way to tell how strong the cycle could be, as in how high interest rates could go?
Well, with my work and the way I approach and utilize cycles, it's more looking for when these specific turning points are, as opposed to the extreme or the magnitude of the moves leading into that. That doesn't mean that I don't have very specific expectations. They're just not dictated by my cycle analysis. That's where I start to get into, I move a little bit beyond what I consider the subjective backdrop indicators, like cycles, like Elliott wave, like some of these Gann techniques that some technical traders are familiar with. And then I start to get into a bit more specific and a bit more objective technical indicators that I use, and some wave projections as well. So they will certainly give me some much clearer and more specific expectation about how strong a cycle should be, how far it should go. You know, I've cited some of my targets in the dollar, and going back even on the downside with gold, and looking earlier this year and late last year with stocks that were hitting major upside targets. All those things were determined by specific price indicators and wave targets, but they coincided with the cycle turning points, which is a very decisive price and time convergence that just helps to reinforce or corroborate the outlook that I have. So there are many other tools that I use to determine that, but the cycles aren't the strongest indicator of how far a market will go within a specific trend. With that said, there are about 25% of the cycles when you're coming to more of a culmination of a trend, and it's a little bit like that 90-10 rule of cycles that I was citing earlier. There are those times when a market has either gone through a progression of successive and higher lows, or a progression of successive and lower highs, where it's getting ready for an accelerated move, and then those cycles do help to identify when you're entering that more extreme phase and when you could see the bigger moves in the underlying market.
Eric, where can people follow you and subscribe to Inside Track?
Well, like we were discussing in the beginning, the best place and the most comprehensive collection of information, of archived publications, can all be found on our primary website at insidetracktrading.com, and that inside is spelled INSIIDE, tracktrading.com. That's the best place to find out all the information and also to execute a subscription to our services.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Haddock, CEO and president of InsideTrackTrading.com. He was speaking to us from Central California. Coming up, Allan Angell next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Allan Angell, one of the top realtors in Canadian history. He's sold more than 4,000 properties. He's located in West Vancouver, British Columbia, and online at the angellgroup.com. Angell spelled Angell group.com. Allan, welcome back to This Week in Money.
I'm very glad to be here.
Allan, you said you had something you wanted to get off your chest before we get into the formal part of the interview. Well, go ahead.
Okay, I just want to give a little bit of the history. I've been a realtor since the 70s, and when I started, I could hardly talk. I couldn't say my name, Allan Angell. I started so bad, so I started on graphs and charts because I think, well, how can I sell some? I'm not a car salesman type, so I started doing all my graphs and charts, and by 8 years, I was a top realtor in Canada, and basically because of my graphs and charts, because the realtors, I'm the only realtor who spends 20-25 hours a week analyzing the market. I do it from Maple Ridge to, all the way in, all the way to Squamish, and I just enjoy it so much, and I still do it. I asked myself last week, would I rather be golfing or do it my stats? I think I would prefer to do my stats. So I have these areas like West Van, North Van, Vancouver, West, Greater Vancouver. My graphs start at 1984, so I have each year, all 12 months, everything. And then the other areas, and then I expanded a lot further, and they start about 1990. So I use these graphs all the time because I need to know. It's so important to know what's going on, especially when you have a market that just changed as quickly as it did. And so you need to know the actual sales. Now, the board on July the 1st said, here's the sales for June, but they're not the sales for June because half the month of June was sold subject for 2 or 3 weeks. So you got to wait till about the 20th of every month to get all the stats in. The board just counts the deals handed in that month, even though if they were done the month before or everything were. And all the realtors use that. No trouble with doing that. I'll give you the best example I can. Christmas month in West Vancouver, the average sales is 33 sales a month, and they had announced 31 sales. When you actually look at all, only 17 were done in December. So there's a far cry. The average realtor says, okay, the market's okay. We had 31. The average is 33. If they even know the average, they probably don't. But there's a big difference between that market and all of a sudden you sell 17. So that's why I do my stats. So I decided to do the market change so quickly here in January and February. You were lining up at the door for open houses to buy the house. There were two places in North Vancouver. I had a client who wanted to spend $2 million, and they were both under 2. They sold that weekend for $2,430 and $2,600. Now that's what was going on in the first 2 months of the year. Then all of a sudden the interest rates changed. The market has now crashed, absolutely crashed. So that's what's happened. And just to give you an example here, my stats, the market 216 was still great. How do I know that? Because I compare the months like January had 103 sales. The average was 50, and then 150, 271. So every month was twice the average. All of a sudden you got to be June, we had 69. The average was 68. Then from that point on, every month sold lower than the average. Nothing happened much. The markets slowed down, but prices didn't change, and that was June of 2016. And by the summer of 17, the board was still saying, "Oh, the market's great," and so the taxes came in and everything else, and then the prices started to drop. So we had 4 years of dropping prices, and that basically ended in July or August in 2020 during the virus, but it ended because there were so many houses off the market. You had to overpay to get the house. So we had 8 months of a very strong market, 8 months. Then all of a sudden, in May of 21, it stopped again, and it was okay. Then by March of this year, it just started to collapse. Okay, I'm all set to go.
With the high rate of inflation and rising interest rates, has the buyer-seller psychology out there changed?
It's huge because the rates have increased so much. I'll give you an example. I sold one house it was a $3.3 million house, and their mortgage was was 1.5%. The new rate he got was 5.08. So you think of the change from 1.5% to 5.08. At that stage, he couldn't qualify. So luckily, his parents are well off, and he was able to borrow a few $100,000 to get the house. That's what's about to happen. Everybody's been buying a house the last 5 years with mortgage rates of 2%. They're all going to be going up, and I'm not convinced they're stopping yet. So there's going to be a lot of people that will not qualify for the new mortgage. And now the house prices are dropping at a rapid rate that they may owe as much as the house is worth today. So I'm very nervous about the market.
We're hearing the bank rate needs to be significantly higher than inflation in order to get inflation under control. Is this being discussed within the real estate industry?
Well, I watch the news from 7:30 in the morning. If I'm in my office or my home, it's on all day long. I don't believe the word the banks say. I don't believe anybody on the news hour. Everything they seem to say is a total lie. So the bank says that. I have no idea whether it's true or not, but nobody is asking me about that. I haven't heard that question at all.
What's happened in the first half of this year to real estate on the North Shore and the west side of Vancouver?
Well, I do all the areas of Maple Ridge, but I decided to do, because I have these charts from either the 80s or early 90s. And so I can go to 1984 for West Vancouver and look at all the Junes from 84 until today. So I decided to do that last weekend, and I said, okay, here's June. What's the worst month we ever had? How are we doing now? I did that for Maple Ridge, Tri-Cities, Burnaby, Vancouver, all areas. It is amazing. Greater Vancouver had 592 sales in June. 592. The worst year in history was 755. The average year is 1293 in June. So there, 592 compared to 755. Vancouver West had 65 sales. The worst year was 86. North Vancouver 61. The worst 75. So basically, West Vancouver had the best of anybody. They were 2 sales above the worst, which is still terrible. So basically what's happening right now, June will be the worst June in the history of real estate. So that tells you, and as I told you, in January and February, they were lined up to buy the houses. You had to wait. I had to wait outside an open house before the realtor would allow, you only allowed so many in. That's how much it's changed. The worst June in history. So that tells you what is going on. Prices are starting to fall. The two houses that I sold, they said 2.6, 2.430. My guess, Bob, by August they will be down to 2.1.
Are you expecting to see increased listings as we head towards fall and winter?
Well, it's interesting because I do that too. I do that for all the areas. I check January and then I go on. So the 4 main areas I look at, West Valley, I have, Vancouver, East Burnaby, all those, but I don't really do a lot of business out there. So West Van started with 255 listings in January. We're up to 444 today. Now the average is 469. So we're going to get higher and higher because sales are getting lower and lower. North Vancouver, 80 houses, which always amazed me. It's always a lot less than West Vancouver. It's twice the size. It had the 80 houses in January up to 332. Vancouver West started at 297. They're up to 716. Lower Mainland started by 2015. They're up to 4556. So yes, they're going to be climbing each month for sure.
How deep into a downturn do sellers start to lower their asking prices and mark them to market?
Well, the problem you have is that most realtors don't spend an hour a week analyzing it. They just use the board stats, and so they really don't know. They don't know the truth. They know the market's softened, but they don't know. I'll guarantee I'm probably the only realtor in the Lower Mainland that knows June's going to be the worst June in history in all areas, because nobody else would have done that. But I love my job. I still like to work. I wish I could get more houses to sell. I used to have 40 or 50 at all time, but now they say, well, Allan, he's too old. I'm probably a better realtor now because I have all the time in the world. So they don't know the truth, and plus the fact most of them are afraid to tell people the truth. The reason they say, well, it's that bad, I'll take it off the market. So nobody will tell the realtor the truth. And plus, then also, the mistake the people make, they say, well, I better get 3 or 4 realtors. I had one, they had 10 people in the house. I was the first one in the house. And they said they're going to have 9 others behind me. I said, well, all that's going to do is push the price up so high. So all of a sudden, now the market's going down. You're guaranteed everybody starts too high on the market. So now they drop it down a bit, but it's still probably above what they should have started at. So they just end up following the market down. I'll give you the best example I can how the market could change at a rapid rate. I sold a house for 6.2, and the guy was here for the contract for 2 years. He was American. He's going to leave it in 2 years. A year and a half into it, I bought him a non-subject offer at $8.9 million. I said, Alex, take this. The market's about to crash. I said, because I'm the only one who spends the time on this. I just sold a house for $30 million. The guy only for 2 years bought it for 17. So I knew it was over. So I told him, but he didn't take it. So because he still had 7-8 months to go before he had to move. I sold it 9 months later, 4.6. He dropped $4.3 million. And I have lots of examples like that. But you see, the realtors don't want to lose the listing, so they don't want to be too hard. They don't want to be too hard on other people. At least in my point of my career, I can tell people the truth because, I decide whether I want the listing or not. I remember I had one that the guy with 10 in there met the husband, couldn't stand him, and his wife came. I said, "No, I'm not your guy. Your husband's not my type of character." And anyway, a week later, I got the call back. Says, "Please, Allan, will you take our house?" All the other guys, all the other top nine, the rest of it, they all lied about it. So they gave him BS, and he knew that. And I took the house. I got along with him so well, it was unbelievable. He was a great guy. So sometimes you're wrong, but I will tell people the truth because you think of it. In my area, in my area that we have 288 sales right now as of today. There's 642 realtors in West Van. We have 288 house sales, 642 realtors, and plus all want to come from North Van from over town. So that's how tough it is. The average in West Vancouver is 730 sales. Last year we had 683. We didn't quite make the average.
How are West Vancouver waterfront properties selling?
Well, when I speak of waterfront, I speak from Ambleside to Horseshoe Bay. I do the house out there as well. But if you look the first 6 months of last year, we had 13 sold, and this year we have 4.
How are high-end West Vancouver properties selling?
Well, the high end, to give you what we just talked about, the oceanfront, so over 10 million. We had 9 last year by the end of June. This year we've had 5. Vancouver West, we had 16 this year. Last year, 94.
What are foreign owners doing?
Well, they're, the guys that live in Canada were born that came from Europe. We like real estate, but mostly the foreign investors, the Chinese especially, they're into real estate so much more than us. That's their life. Iranians are a bit like that too. So the foreigners, they pay attention to what is going on, and so they tend, especially the Chinese. So if the market's falling, they'll sit back and wait.
Are rising interest rates likely to cause monetary or psychological concerns for buyers in the high-end home market?
Well, not just the high-end. The high-end market, very few of them have to sell. I mean, there are guys who are building houses now. If you're building a high-end home and you only just started it 6 months ago, you're probably going to have a real problem because the rates are going to change. The market is dropping. But for the average person who owns one, they generally sit back and just wait. So the low-end market is going to be totally different because everybody's becoming more aware of what is going on. They're going to be calling their bank about the interest rates. They're going to be worrying about qualifying. So it's going to be scary.
Is it tougher for people to get mortgages for high-end properties when interest rates are on the rise?
Well, it's tougher for all of us, but most of the high-end people that I deal with, if they're, Chinese or Iranian, they get a mortgage for 50%. They always like to have a mortgage of, that they can say, here's how I pay my bills. So they put down 50%. So really, it isn't that much of a problem. But the banks have been tougher for a few years. That started at 2017. If the board had told the truth that the market was already over for over a year, maybe the taxes wouldn't have come in, and the banks wouldn't have changed a thing. That's the trouble with our business. When you pay attention to what the board says and they make their decisions on that they need somebody like me who says this is what's actually going on right now. The market's been a year and 3 months has been over with. Not much has happened. You don't need to do all of these changes because it's already stopped.
Could some developers of high-end homes be in trouble as interest rates rise?
Yes, as I said, if they're just starting to build now, they could be in trouble for sure. Because I pray that I'm wrong. Just about every time I'm not wrong, but I can. There's a lot of things that concern me, as you can see. I think we're going to have a tough time for a couple of years.
What percentage of sellers need to sell versus people wanting to sell if they get their price?
Well, everybody says, I don't have to sell. I don't need to sell. If I don't sell, I'll take it off the market, whether they need to sell or not. But the fact of the truth is this. Is it a good time to sell? You're probably going to get more money than you're going to get in the next 6 or 8 months. So if you're thinking of selling in the next year and a half, maybe 2 years, you should probably be doing it now. But if you don't care, you're going to live another 5-10 years in the house, then you shouldn't be selling now because it's going to come back and you'll get more money a few years down the way.
Are deals collapsing due to the buyers not being able to sell their current homes?
Well, not as we had a few. We had a few because the market changed and the people didn't know. There were people saying the realtors would say, one of our top realtors sent out a flyer last year, near record number of sales. And I thought, oh my God, is this guy that stupid? He's a great realtor for selling, but he hasn't got a clue. And near record number of sales. We had 683 sales last year. The average is 730. The best year is over 1,200. So how is that? So that tells you that now compared to 2018, that was the worst year. We had 321. So 683 compared to 218. Yes, it's a great. It's a bit. But near record number with 683. Since when did 683 get close to 1,201? So that's the trouble, and that's why it drives me nuts. I spend so much time. The knowledge I have because I need to know the truth. People I love to work still, and I need to tell them because they need advice. I've seen so many people lose millions of dollars because they didn't pay attention. I got appraisal on a house a day ago. It's been on and off for 5 years. And honest to goodness, and very nice lady, very talkative. I thought I was talkative, but she was worse than me. But I can tell she doesn't pay attention to what the realtor said. She said, here's how I like my house to look. Well, she walked around for 20 minutes around the house, the outside, showing her where all the septic field might be and everything else. Well, 20 minutes before I got in the house. And she said, I want you to show the house. I said, no. I said, I'm not going to show it like that because, I mean, people know as soon as they walk in the door whether or not they like the house. They have no interest in seeing what's going on. If they like the house, then they'll ask you these questions. So that woman, and she did most of the showings apparently. She didn't even allow her realtor to do it. You know, so I said, no, if I take this house, you're not showing it, I don't want you near it. And because it won't work. So people don't know. I have a saying in my life, which is terrible. I've never met an intelligent person, including myself, because I look at everybody. We're okay. You may spend years in school, but you're just an average individual. And average individuals end up in government, and that's why government never does a good job, because why should people decide something they're not involved in? Our real estate councils, I think, got 2 realtors out of 12 on it. The rest aren't. How can those other guys know what's best for my line of work? It's absolutely insane what is going on.
Are deals collapsing due to bank appraisals being significantly lower than the sale price?
Well, yes, most people are surprised because basically, you know, you make an offer on a house and it's subject to bank appraisal. Then it comes in lower than you expect. So all of a sudden, you know, they're not getting as large a mortgage as they want. So yes, then they change their mind and they don't buy it. The biggest problem we have in our business is subject to a sale of a house. Now, when the market softens, everybody wants to do that. Well, I'm not going to buy without having my house sold. So they want to go in. They want to go in subject to the sale of a house. Now, the problem we have with that is, one, I'll guarantee you the realtor's already told you your house is worth more than it actually is. So he's told you it's worth 4. It's probably worth 3.5, but you're not thinking it's worth 4. So now you're going out there finding a house expecting to get 4, so you make it subject to the sale of your house. And if the guy's been on a long time, he may take the offer. But guaranteed what's going to happen, it slows down the sale, it slows down the people who want to look at your house, because, you know, we have to tell them that there's a subject to sale of an offer on the place. Now, you'll have an escape clause, but, you know, if you don't get the house, you want that house even more. So I don't like showing subject to sale. But what will always happen is that all of a sudden, 2 months later, they'll come back. Well, I've got an offer in my house, but it's for $600,000 more than I thought I was going to get. So I need to reduce the offer on yours. So I don't like those type of offers at all, because sure, they may reduce the price finally, but it was way too hard to start with. So I said, if it's 4, now it's worth 3.5. Then it's gone down more. So they reduce it to 3.75, but now it's only worth 3.3. So the realtors, unfortunately, you think of how many realtors there are and how many sales there are, and the top guys. When I was at my peak, I would do over 100. Now the top guys are 60, 65, because we didn't have the Chinese group and the Iranian group as much as we have now. So it has changed, but still, half the realtors sell 1 or 2 houses a year. And so how can they be an expert, especially since the new superintendent came? I mean, he's changed every rule in the book. I think he's hurt our business immensely. He ripped the heart out of it. So, but every month there's a new change. Even I am nervous about writing up a deal, which I was never nervous for years and years. But now there's so many changes and none of them make sense to me. But now when you go and sit down with a client to buy a house, you got pages and pages of stuff to talk about that people are already nervous to buy it. Now they're so nervous because why are you asking all these questions? Where I was trying to have fun with it. I learned years ago when I used to wear a suit every time I went out, because then I had a big client who owned the Denver Broncos come out to buy a house up here, and I'm out in a suit and tie, he's in his jeans. And so I felt uncomfortable in a suit and tie. So I learned, well, you know, buying a house should be fun and casual. So then I dress casual all the time. Young guys who start off, they always dress in their suits and ties. The top guys in my office do, but I like to enjoy myself. I like the people. I'm not in car sales. I'm in house sales. They're going to live in the house for a long time. I enjoy that. Absolutely, it's the highlight every time I do a sale, I smile. The woman that just called me about this house to sell, I showed her house. I showed her house 4 months ago. I never met the woman, only met her because she was the agent didn't come. She said, I've never met anybody so excited about selling houses as you. So please, will you come and sell mine? That's important, but you got to have the knowledge. You got to have the knowledge so that people believe what you are saying, and that's what I love. I can sit down and say, I don't care what the others say. This is what is happening right now.
What could stop this real estate downturn from turning into a crash?
I don't think it can be, to be honest. I mean, if the interest rates start to drop and things like that, I mean, look what the world's doing. The price of gas, the price of food. I mean, my car is a Range Rover. It used to be $125 to $130 to fill the tank up. Now I put in $200. My tank doesn't get filled. I still got another 6 or 7 liters to go through to fill it. So prices are so. And honestly, if the interest rates drop to 2% or something, I think we'd probably be fine. But there's not a chance that's going to happen. So it's just going to be a struggle. I have to worry about my staff in the office. I go to my office now. It's empty. Nobody's hardly there. You think 32 sales for West Vancouver for 640 realtors who work in West Vancouver, plus the outside ones. So there's not a lot of business that is going on.
Is there a significant cost for realtors to maintain sales listings when buyers are no longer there?
Yes, that's one of the hardest things for a line of work. Like you're doing an appraisal on a house, and then 6-7 months later they decide it's time to sell. So that's all they call you. Now they still think it's a $12 million house. Now I'm thinking she's going to ask 12, so it won't sell. She'll have to go 3, 4, 5 months of hardly any action on the house, and then sit down. So I'm thinking by the time it sells, it'll probably be around 9. So that's the problem you have. And if it's a 3.5 million, by the time it's settled, it could be 2.5. So, but the people, because they're not getting the showings they want you to spend a fortune on promotion and everything like that. They want the drones, they want all the fancy pictures. But you know what? Those tools are to list the house. When I go in and say, I'll do this, that, and that, I'm not thinking for a minute it's going to sell the house. What I'm thinking is that, look what I could do for your house. Oh, I like that. Look at the brochure he's got. I want my house in there. That gives me the listing on the house. But then the market changes like this, and they still want that and more. They now want, years ago, I spent probably magazine articles in the Station magazine, real estate books and stuff. I think I spent about $350,000. They were like $5,000 a page on those type of advertisements. All the years, I got one client off it. One client. But it looked good, on their coffee table, the magazine looked good. But it doesn't help sell the house. You need to have, see what I do. If I get a listing, if it's price, sometimes it's priced too high, and I think, well, I got to go through this. Or sometimes I'll just say, I won't take that. Like I turned down one about a month and a half ago. I told him it was worth 5.2. Brand new house, took him 4 years to build it. He's in for 6.5. 6.5 because of what's going on with the economy. And it's not going to sell more than 5.2, so I don't want the house. So I said, give it to me third. So if somebody listed it for 6.9, no chance in sell. He'll give it to somebody. I'll take it third when now all of a sudden it's getting down to a price that it might sell. But a lot of these guys just want that because, they said, well, if I get a $6 million house, it looks good in my advertising, things like that. So they think, I do high-end real estate too. There's all different realtors. The reasons why realtors will take the house, not because they expect to sell it, because they know when they list the house where that house has a chance to sell. But they're not going, oh yeah, don't worry, I'll get it done. I know how long it's going to take. Sometimes wrong. I got one on King George Road in the British Properties. Now, when I got that, it's a ranch. You can't find it. Everybody wants a ranch. You can't find them. I got a 4,200 square foot ranch on a 20,000 square foot lot, all remodeled. That house should have sold the first day. The first day on the market, because I have people calling me for ranchers every month or two. But the market had just changed that week. And you say, well, how do you know because when the market changes, it doesn't change just gradually and good. It changes. Somebody turns off the tap. It happens one day of the week or something, and you know it's over. All of a sudden, since that time, now it's 2.5, getting on for 3 months, it's still there. And that house I would have thought would have sold. I took that house. I said to my wife, well, that's going to sell straight away. It's unbelievable. I even said to my wife, I think we should buy this for us. She says, why? We got our beautiful apartment. We got the house that you love. It's your man cave. We got the pool. You can hit golf balls there. I said, but we don't have a place for our dog. We should buy this as an extra house, and just because the yard is sensational, and it just happens to be right across the street from the entrance to my golf course. So she said, well, you can buy it. You can go stay there once in a while, but I'm not. So that was the end of that discussion.
Do you think it's a better time now to be buying or selling?
If you don't have to sell and you can wait for 5 years, then don't sell. If you're thinking that you're going to have to sell in the next year to two, you should be selling today, because the market's only been soft for, since March, end of March or sometime. It's really started to change. So, and summertime's always slow. So, I said June is the worst June in history. July will probably be the same. So it's going to be a terrible time to sell the house. But if you price it right, because I guarantee you, still 85% of the houses are still overpriced. Normally it's about 95, but 85% or so. If you price it because you want it sold quickly, there's a house you want to buy, then sell now. And also, most people think, well, I'm just going to wait. The market's falling. I'm going to wait. Well, that's fine. But the trouble with that philosophy is that, so now the market's dropped, and you think, okay, well, now I can afford this price. I'm going to go and buy. But you're still going to find a house that you like. Just because prices have dropped doesn't mean the house you want to buy is there. I have clients that are looking for a year and a half now that haven't found the house they like. So, but somebody says, well, I'm going to wait for a year, then I'll get the house I want. You won't find the house you like. And that's the trouble with doing that. So I always say, doesn't matter when you buy, if the realtor knows what they'll tell you you're overpaying. I mean, that house I sold for $30 million, he overpaid for it, but he wanted it so much. He called me, he says, Allan, tell me honestly, how much is my house worth? And I said, oh, God. I told him 22. He said, you mean I overpaid by 8? But he wanted the house, so he started to laugh. So he says, thank you, because the bank just appraised it at $22.5. Now, that was the toughest question. Can you imagine me telling you overpaid by $8 million? But I knew who the guy was. He had all the money in the world. He won, and he got one of the spectacular houses. There's one I got a call on the other day on the golf course. I've been asked 20 times in my career, if that house ever comes up, I want to buy it. It's an old clunker, but it's a great lot. And so she says, well, if the market is dropping, I don't want to sell for a year and a half, but the market's dropping so much. I said, yes, it is, but you know what? Guys will pay you. Your house isn't going to be affected as much, because that's one of the prime properties in West Van. I remember Jimmy Patterson. I sold a lot beside him in the 70s, and he got a huge price for it. He was so happy. I doubled his money in 2.5 years, and he said, you're going to be a great realtor. I sold that house that property a couple of years ago. They didn't change the house. It was I never saw inside. It was so bad. But Jimmy Patterson lived right next door, and he had an option to buy it for a certain price. I said, I'll get you more. I got them $1 million more, because living beside him is a huge thing. My neighbor's here's my neighbor. So this lot was the same type. So the market's falling, but I'll guarantee you, prices, that is going to hold its value, because everybody wants to buy that lot. There was a house on the other side of the golf course I wanted to buy years ago. I talked to women 3 times, please sell me your lot. So, she didn't. She lived there for 60 years, as it turned out. So finally, I got it. But then I was living on the ocean front, so I didn't care. But so I've sold it now twice. So, and that was always a big price because it's a great lot. So if your property is so special, the bad market will not be as affected like the normal market is, but you have to know that. So don't worry if you got one of the greatest lots in Vancouver West or wherever you are. It's going to drop a touch, but not much. People will still pay a fortune to buy it because that's why the guy paid so much for that house. It was 3 lots at one time, and joined to 3. And so he bought a huge property, one of the great waterfront houses in the Lower Mainland. Now you don't get to buy those. You don't get to buy those often. So if you overpay for it, you're going to stay there long enough. It's going to get past what you overpaid for it. In any case.
Allan, is there a big difference between buying the real estate you want when you say that's the perfect house and buying an investment?
Well, it's 2 different hats you're wearing there, because you see, buying an investment, I mean, you have a wife and kids probably, so there's a certain type of house you want. You want it in a certain location, close to the school or something else. If you're buying for investment to rent, and rents are so high now, it's absolutely, I sold a $3.5 million apartment. They had to rent it out for $8,000 a month. I mean, it's insane what you get. So if you're buying for investment, then you gotta have the. I can't stress how important your realtor is, because he or she will know where's the best thing. I divide West Vancouver, all the areas, British Properties, Chartwell, Bay Ridge, Caulfield, Horse, all of them. And there's like 4 or 5 areas in each one. I check who buys every house there. I can tell you whether it's a Chinese buyer, Caucasian buyer, a rainbow. I check every one, because when I go to put a house on the market, I say, okay, out here where I am, 82% are Caucasian buyers. If I'm buying in Chartwell, Caucasian buyers are hardly there. They're like 15%. So I know when I go to sell it, who's going to be the buyer and who I got to promote it with, you see. So, but if you're going to rent, you've got to get in a location that people can walk to the beach or something. You'll get huge rent for those places. You don't need it. You don't need that huge lot. You just need something that they can rent. And so many people, houses are still so expensive. They're never going to get to the point where everybody can afford them. So you buy an investment. You buy in the best location where people are paying huge. A house I just sold it for $6. Now the same old story. Assessor was away in the 7s. It was worth more, but she turned down offer after offer. And I said, please just take this. This is insane. This is because the market's not. I showed her this is how it's changed. But she had an offer to rent that for $22,000 a month. $22,000, and she might have got more because we didn't really push that, because we said, well, maybe if we don't take this offer, maybe I'll rent it out. And then she was offered 22 to someone who knows her. Then I got the house sold, so we didn't do it. So that's the kind of rent that you can get, but you still have to have the money to buy it.
Allan, how can people get a hold of you if they want to chat real estate?
Angell Hasbun is the name of my company. Malcolm Hasbun is my partner. Angell Hasbun in West Vancouver. My email address, allanmarkangell@gmail.com. That's Allan, ALLAN, MARK, Angell, ANGELL. 2 L's in Allan, 2 L's in Angell. Or my phone number is 778-888-7474. 778-888-7474. And I love to talk. I get calls all the time about real estate from all over. Normally when I do this podcast, I get guys from Manitoba or somebody, Saskatchewan, somebody called me. If you live in White Rock or something like that, I had a new knee. My guy who came into the physio, he lived in Maple Ridge. I said, well, here's the chart. This is a chart I have for Maple Ridge. It'll tell you exactly what's going on. None of the other realtors will have this. This is the truth. So if you live in Coquitlam or somewhere like that, I can give you just a few minutes on the phone. I just got to open up the book and say, here's what's going on in your area there. Because I love this business, and nobody should overpay for a house unless you absolutely have to have it and you don't care about the money. You just want to buy it. But houses go up and down, so you have to be careful, because the worst person could be is like last few years you got a mortgage at 2%. Now they're going to be 5 or 6%. That is a hell of an increase if you have a large mortgage on it.
Allan, thank you so much for being on This Week in Money.
Thank you, Jim. I'll talk to you in a few months. Thanks. Bye-bye.
My guest has been Allan Mark Angell. You can find him online at theangelgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Haddock, and Allan Mark Angell. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.